It's Tuesday, the 20th of July 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. Global share markets, including the ASX, fall sharply as the rise in COVID cases rattles investors. Meanwhile, the number of cases locally triggers new and extended lockdowns. That's our main story. Also coming up in today's podcast, disgraced former New South Wales Minister Eddie Obeid set for a long stint in jail. The superannuation sector reports its best returns in 24 years. And one of Australia's best-known investors calls cryptocurrencies a mass delusion. Then, stay listening for my chat to the boss of one of the oldest buy now, pay later groups in the country. COVID dominates this morning's edition of Fear and Greed, starting with financial markets. Wall Street indices fell sharply overnight as fears about the pickup in COVID cases rattled investors. Numbers of cases are rising in many developed economies as the Delta variant spreads quickly, and there are concerns that the new wave will cull the economic rebound just as prices are starting to rise. In early afternoon trading, the S&P 500 was off 2.1%, the worst single-day fall since May. The Dow Jones Industrial Average was 2.6% lower, and the Nasdaq was off 1.4%. Economically sensitive stocks were the worst performers. US bond yields fell to their lowest level since February, reflecting a scramble for safer assets. European markets also tumbled overnight, with the FTSE 100 and Stoxx Europe 600 both down more than 2.3%. Across the region, it was the worst day's trading since last October. Asian markets were weak yesterday, with Hong Kong's Hang Seng down 1.8% and Japan's Nikkei off 1.3%. The local share market closed 62 points lower yesterday, or 0.9%, to 7,286 points, as investors reassessed the implications of the lockdowns. BHP and Rio Tinto both fell more than 2% after running hard last week. Fortescue was off 1.4%. All the major banks were lower, not surprisingly, because lockdowns hurt earnings. The supermarket retailers were a touch stronger, given they benefit from shutdowns. CSL jumped almost 2%, leading the way among the healthcare companies. Sonic Healthcare and Fisher and Paykel Healthcare both closed nearly 2% higher. Oil prices tumbled 7% in the first day of trading after OPEC and its allies agreed to hike the supply of oil by 400,000 barrels a day. Also weighing on oil overnight were concerns of an economic slowdown. Brent crude is back down below $69 a barrel. That's good news for petrol prices, at least. The price of gold has come off over the past 24 hours and is trading around $1,800 an ounce. That triggered a sell-off in gold stocks on the local market yesterday, with Chalice Mining falling nearly 10% and Evolution Mining down 8.7%. Market leader Newcrest Mining finished 2% lower. The Aussie dollar is trading at 73.3 US cents, its lowest level in 8 months. Overnight, there was a rush to safe haven currencies, the US dollar, the Swiss franc and the Japanese yen. Adding to the pressure locally is speculation among market economists that the Reserve Bank will rethink its tapering of asset purchases. The economic outlook has deteriorated sharply over the past week on the back of lockdowns, and that might be enough to convince the central bank to keep the foot on the gas, economists said. And finally, cryptocurrencies are also feeling the pain, with Bitcoin overnight falling back towards $30,000 a unit. The COVID news in Australia shows few signs of improving. One state will have restrictions introduced, another will have its lockdown extended, and a third sees no end in sight after a rough 24 hours. In New South Wales, there were 98 locally acquired COVID-19 cases in the 24 hours to 8 p.m. Sunday night. 2/3 of the cases were in southwest Sydney and 20 were infectious in the community. There are now 82 people in hospitals in New South Wales from coronavirus, of which 24 are in intensive care. Sadly, a fifth person from the current outbreak died yesterday. Federal Minister for Government Services Linda Reynolds said 331,000 claims worth $155 million have been approved for New South Wales residents in lockdown. Employees who have lost hours or been stood down can apply for a $600 weekly payment. Premier Gladys Berejiklian said Australians will need to live with some level of restrictions until vaccination rates rise, nominating 62% as the target rate before life could return back to normal. Meanwhile, the state's Chief Health Officer, Kerry Chant, said the fact that children were contracting the Delta variant meant the government would have to rethink its vaccine strategy. There were 13 new community-transmitted cases reported in Victoria yesterday, all linked to known cases. There were another 4 which were in isolation and will be reported in this morning's numbers. The Andrews government will still extend the lockdown beyond today, though construction will stay open in Victoria, unlike New South Wales. Another interesting fact out of the Victorian media conferences yesterday was a comment from the state's Chief Health Officer, Brett Sutton, who said masks contributed 40% in terms of reduction in transmission. And 2 residents of South Australia tested positive yesterday, triggering new restrictions around gatherings, banning of community sport, and the closure of non-essential retail in the state. And finally, spare a thought for the Prime Minister. He wants to be in Canberra for Parliament, resuming on August 3, so he's left his Sydney home and has gone back into lockdown in Canberra. That's at least the 3rd time this year. Okay, lockdown in the lodge is a little bit different to lockdown in a 2-bedroom apartment with young children, but still. In a moment, the rest of the news you need to know this morning. In overseas news, the United States, the United Kingdom and their allies have formally attributed the hack of the Microsoft exchange earlier in the year to people affiliated with the Chinese government. In a further escalation of tensions, the group, which includes Australia, accused Beijing's leadership of an array of malicious cyber attacks, including ransomware, data theft and cyber espionage attacks. The group said Beijing was protecting the attackers. Now, Beijing might not be making many friends around the globe at the moment, but that doesn't seem to be dissuading investors from putting money into Chinese assets. Global holdings of Chinese stocks and bonds have jumped 40% to more than $800 billion over the past year, according to the Financial Times. And in what I'm afraid is going to be a regular report over the next couple of weeks, around 30 Olympians in Tokyo are now in strict isolation. The South African soccer team and the British track and field team have been hit hardest. Locally, disgraced former New South Wales MPs Eddie Obeid and Ian MacDonald and Mr Obeid's son Moses face extensive jail terms after being found guilty of conspiring to grant a lucrative coal mining licence in 2009. Justice Elizabeth Fullerton in the New South Wales Supreme Court yesterday found that Mr MacDonald had committed a gross departure from his responsibilities as Resources Minister for the state and had denigrated the public office. The Obeids were found to have conspired with Mr MacDonald over the granting of a coal mining licence near Mudgee, which would have reaped them tens of millions of dollars in profits. Mr Eddie Obeid has already spent time in jail after being found guilty of misconduct in public office for failing to disclose his family's business interests in cafe leases at Sydney's Circular Quay. The chief executive of struggling explorer Oil Search, Kieran Wolfe, has resigned due to ill health, which was reportedly aggravated by an investigation into a whistleblower complaint against him. While Dr. Wolfe, who has been in the job for less than 18 months, said he was leaving after consultations with family and doctors, Oil Search released a statement that said he had, and I quote, behaved in a manner inconsistent with the standards expected by the board in relation to his management style, end quote, whatever that means. Oil Search has a $4 billion project in Alaska and is looking for a partner, and also has extensive operations in Papua New Guinea. The group's share price fell more than 5% yesterday. The superannuation sector had its best result in 24 years in 2020-21, with the median growth fund posting an 18% return. 8 funds managed to deliver returns of more than 20%, according to research house Chant West, including Mine Super and funds in Colonial First State, Hostplus, MLC, Sun Super and Australian Super. The best performing funds, not surprisingly, had a higher allocation to listed shares. Over the past decade, the best performing growth funds have come from Australian Super and Hostplus, with average returns of 9.7%. In the world of funds management in Australia, Hamish Douglass, co-founder of Magellan, is a bit of a rock star. He's attracted huge amounts of money to his funds and performed very well, though results in more recent times have been less impressive. So, people listen to what he says. He's come out hard against cryptocurrencies, saying they are one of the great mass delusions in modern history. Mr. Douglas said it was inevitable cryptos crash to zero, notwithstanding that the market of the 2 biggest, Bitcoin and Ethereum, are worth around $1.5 trillion. I think he has a point. Last week, I told you about the story based on media reports that the federal government had asked Telstra and other businesses to purchase a 3G network called Digicel Pacific in Papua New Guinea to prevent it falling into Chinese hands. Yesterday, Australia's biggest telecom provided a slightly different spin. Telstra said it was in discussions with Digicel regarding a potential acquisition in partnership with the Australian government. The company said it was first approached by Canberra to provide technical advice, and now it was looking at buying Digicel, though nothing had been agreed upon. Any deal would need significant government funding and a support package, Telstra said. I still think it's a remarkable situation when the government calls on the private sector to do its national security work for it. ANZ last night unveiled a $1.5 billion share buyback to return capital to shareholders. The banks are awash with money at the moment, about $34 billion in excess capital, according to analysts, and the other three majors are likely to announce capital management initiatives in coming months, including buybacks or higher dividend payments. Ramsay Health Care's $3.9 billion bid for Spire Healthcare in the UK has been dealt a blow, potentially fatal, after a shareholder vote overnight fell short of the 75% minimum threshold for the deal to go ahead. It means the bid has officially lapsed. IT services provider Empire isn't exactly a corporate powerhouse. It's worth around $200 million, putting it at the smaller end of the market. But yesterday, French multinational Capgemini agreed to pay a 60% premium for the group. The product and licensing company's share price jumped 59% and, not surprisingly, was the best on the bourse. And it was a wild ride yesterday for Altium, the circuit board maker. There were reports in the media that US group Autodesk was walking away from its $5 billion bid for the ASX-listed company. Its offer of $38.50 a share was rejected 4 weeks ago, and media reports said Autodesk went back with a new offer over the weekend, which was also rejected. That sent Altium's share price down more than 11%. Altium went into a trading halt and then released a statement saying it hadn't received any further takeover offers from Autodesk. It then started trading again and its share price surged, eventually ending the day down 3.8%. And no one's the wiser about whether there's a new takeover offer coming or not. Coming up next is our daily interview. My guest today is Michael Idle, Chief Executive Officer of OpenPay. Founded in 2013, OpenPay is one of the more mature buy now, pay later providers on the ASX. I spoke to Michael about how they'll handle the increased competition in the sector, now that Apple Pay and PayPal are both entering the fray. Michael's very upfront about how OpenPay competes with the giants of the industry, and it's an interesting insight into why Australia's so far ahead when it comes to homegrown buy now, pay later companies. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Tuesday, the 20th of July, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.